Well, it was a good solid relief rally, 1.6% in Australia, and various gains of more than 1% around Asia today, and we'll see what happens on Wall Street tonight. Perversely, the US dollar fell despite all the happy press conferences in Washington, because when they're worried, investors don't really know what else to do with their money but buy American Treasury bonds and US dollars. When they're less worried, as they are now, they buy assets that are perceived as more risky, such as Australian dollars. Arguably, of course, there are a few things riskier than an American dollar right now, but as we've learnt these past 5 years, markets are nothing if not irrational. And by the way, here's an interesting chart of what happens when sovereign debt is downgraded by Standard & Poor's, as America's might be. It shows the average impact on 10-year bond yields from the entire history of AAA sovereign downgrades by S&P. And would you believe, yields go down, that is, prices go up. In other words, countries usually benefit from an S&P downgrade because it's a signal for investors to buy, not sell their bonds. Anyway, there were solid gains among the resource leaders and the banks on the share market today, with BHP and ANZ up about 2%, and even the retailers joined in, almost as enthusiastically. The Reserve Bank can now perhaps cross off US default from the list of things to worry about, at least this week. But there were some data on the local economy today that would further push them to keep rates on hold tomorrow. The performance of manufacturing index fell a lot. The ACCI survey of business expectations fell, and so did new home sales. Here's a graph of the manufacturing index. Now, anything below 50 indicates contraction, so after a brief flirtation with expansion, it's contracting again, and quite markedly. And that's finance.